Hey, how's it going, guys? GM. Want to invite you guys to the DeFi Multichain panel over here with a bunch of Chads. So why don't we, go across the room? We'll do some quick intros. I'm Nero, CryptoApe on Twitter. I'm the CEO and founder of MCA and Multichain Advisors.
Hey, I'm Sterling. I lead all things BD for us in the ecosystem at Circle.
Hi everyone, my name is Sergey Kunz. I'm co-founder of 1inch Network, software engineer, software architect. 1inch came with the first innovation of aggregating decentralized exchanges. Nowadays, we are driving intent-based swaps and cross-chain swaps.
Hey everyone, I'm Tomer, Chief Product at the Stellar Development Foundation. Stellar is an L1 blockchain, been around for a while and really focused on real-world utility. And just this year, we added a virtual machine, so there's a booming DeFi ecosystem.
GM everyone, my name is Mario, and I work for the Pit Data Association and a contributor to the Pit Network. As you know, Pit Network is the largest first-party data oracle out there, expanding more than 80 chains and, of course, powering more than 400 different applications.
Awesome, guys. Thanks for the intro. So we're going to have a cool panel here today with 3 questions and then a few hot takes. So might get spicy with a few debates. So I'll start it off over here. As companies building in the DeFi, multi-chain space, what are some of the challenges you guys are facing in terms of DeFi adoption and going multi-chain?
I can start from being also a software engineer and working here with my 1inch buddies on all the challenges. Building cross-chain is difficult. It's difficult, and of course there is good group of competitors out there who have own approach. We try always to do something where it's nothing anymore to remove. So you have really small footprint, high safety for the user, high security. Recently, we launched cross-chain swaps. You maybe have seen, and it was also kind of challenging in terms of to come to this because we had just a vision, idea, and no one did it before, and it was really difficult, kind of, to try to touch, understand, change, try to touch, understand, and then. It took 1 year to implement it completely. It's a challenge, but it's worth from our point of view. If you look on the data, how the liquidity is distributed, just in DeFi, if you look, you have a lot of an Ethereum half of the liquidity, but the other half is on layer 2. On Base, on Arbitrum, on Binance Smart Chain, also Near and Ton, and more blockchains are coming who are supporting DeFi. But if you look at the crypto in general, you have Bitcoin, a lot of liquidity there, and no one really touch it. Most of the people are holding it, and little bit trading on centralized exchanges. And every time they need to find the right centralized exchange for them. And there's actually a huge room to grow for Web3 in DeFi space.
Yeah, that makes sense. Bitcoin, DeFi, definitely some exciting stuff happening over there, especially with Bitcoin hitting all-time highs, in the last 24 hours.
Oh, yeah.
I would say the multi-chain thesis is a pretty terrible experience for users, to be totally honest. And if we're as builders, we need to try to figure out if it's going to continue. And if it is going to continue, then we have to solve it so no one realizes what chain they're on. And I think we all know that, but I think people are enticed by the sequencer fees and being able to actually have your own app chain. If you have users, you think you should have your own chain. But it's a really challenging user experience. And I'm really curious, actually, in the next 3 to 4 years to see where it goes, if it's something that continues the trend and people abstract away the difficulty, or if people realize that liquidity, for example, is just too high of a burden for all these different cross chains, and that it goes away, and you start to see people consolidate onto 1 to 5 chains where there's actual liquidity and make the process easier. So I actually think it's a real problem for us as an industry, both on the liquidity side and then also a real problem for users. And I'm really curious to see where things net out over the next couple of years.
I guess follow-up question on that. What kind of solutions are you guys, seeing on that front? Because that's clearly, a big issue with fragmentation.
In terms of liquidity or for the user?
I guess in terms of like liquidity, like just having like interoperable, like seamless multi-chain experience.
I mean, we have Circle has products. USDC works multi-chain. We have the ability to move USDC around seamlessly across the 17 blockchains we support. So we do work on supporting all these different chains. But that said, like it still takes us 6 months, 3 to 6 months to deploy native USDC on these chains. So getting liquidity from day one, and that's just USDC. Never mind all the other bridged assets that need to get over there and set up bridges and create oftentimes honeypots of these bridged assets that actually sit there and get attacked. Like it's far from ideal, but we do respect that is the trend right now, and we are building solutions for it to try and make it easier for both builders with liquidity, but also for users to actually have funds move around pretty seamlessly and safely and securely.
I would like to thank Circle that you started to operate multi-chain. It helps a lot. So without you, we would have much more problems. Our resolvers are rebalancing through USDC cross-chain. So we try to make a simple user experience on user side and move all the risks to the professionals who can afterwards rebalance the assets. And it helps really well to burn USDC on one chain and to mint another chain.
Yeah, it's capital efficient. Yeah.
Yeah. It's really. And in terms of like what kind of technology would help to improve the user experience in this space is intent-based protocols. More and more coming, like we came 2022 with the first cross-chain with the normal intent-based swap, Uniswap joined, and CowSwap as well. Also with the MM approach that you provide liquidity through intent-based, and it helps a lot where user just define what they want to get and don't care how it's going to be executed. Yep. It's kind of the next big thing from our point of view.
Yeah, that makes sense.
Yeah, I think we're going like really deep into problems that people in the industry experience and people that are already in this kind of like crypto ecosystem. But just going in and out of crypto is such a huge challenge right now for people around the world. And I think sometimes because we're so deep in it, we kind of forget how challenging it is to get into it. And so, one thing that we've worked a lot on in Stellar is this idea of real world utility and financial access. Like, how do we actually make this accessible? And one of the solutions we have is what we call the Anchor Network, which is this global network of interoperable on and off ramps. And the biggest one is actually MoneyGram. And you can go with USDC on Stellar into one of more than 300,000 agents of MoneyGram around the world, cash agents, and turn your USDC in your Stellar wallet into cash in your pocket or cash in your e-wallet or cash in your bank account. And I think that's extremely important. And, we're seeing more and more adoption because of that. And as a even if you're building like a dApp or a wallet, you can integrate with that and create this seamless cash to DeFi experience.
Yeah, for sure. I mean, to add in there, funny enough that you mentioned, I was actually talking to my normie friends yesterday on what happened with the ACT AI coin that listed on Binance. And, they were asking like, how is that, like, how do you even take that money out? For them, like, they don't understand the concept of a decentralized exchange. So I think you're right. Like, we're deep in this space, but there's definitely a lot of issues that need to be resolved.
And I think to your point as well, I think that's why I feel like a lot of the focus here, I think, is, you mentioned about users and everything else, but I think we're kind of missing the big picture here is that institutions and pretty much everyone here doesn't really care whether it's going to be DeFi, whether it's going to be CeFi or anything else. Like, I think users at the end of the day, whether it's institutions, whether it's like retailers, they just want to care about three things. I feel like it's going to be trust, speed, and cost. Whether it's going to be DeFi, whether it's going to be CeFi, I think is much less kind of like pretty much irrelevant in that sense. So if you take a look at, for example, trust, people are only going to be trust, like institutions, of course, because of their branding and et cetera, et cetera. You look at speed, right now TradFi still has a lot of their pretty much an advantage as opposed to current DeFi kind of like infrastructure and everything. And also at the same time for cost, a lot of the friction that, in the DeFi stuff are pretty much kind of like self-inflicted. So I think once we are able to address all these three things, and for Pyth, I think kind of like our main kind of like targets are pretty much trying to address these things to be on par or even better than what currently CeFi has to offer. So I think from our standpoint, it doesn't really matter whether it's going to be like, like CeFi or DeFi, and regardless of all those things, I think the main kind of like idea that we need to keep in mind is that user adoption, whether it's going to be institutions, retail, they won't come if all of these three things are not addressed.
Yeah, no, that makes sense, and it's good to have a bunch of the companies over here that are making that happen and make it possible. So shout out to you guys. Cool. All right. So next question. So on the topic of multi-chain and interoperability, one of the biggest risks associated with that is hacks and security. How do you guys as companies enable like DeFi is secure in each of your guys' companies?
I'm happy to jump on that. So, because we kind of like are a late mover on, having an actual smart contracts runtime, when we built Soroban, which is our virtual machine, we went around the ecosystem of existing platforms out there and tried to figure out, what's working and what's not and how we can improve on that. And security was a big thing, the big elephant in the room that needs to be addressed. One thing that's crazy, and this is from a protocol design perspective, we're still, it's 2024, people are still launching, EVM chains with reentrancy enabled by default, which is, a terrible mistake that we just keep dragging it along in the name of EVM
Or a feature.
interoperability. Having it enabled by default is not a feature. That's a bug. And so I think, obviously one thing that you can do is you can disable reentrancy by default, and then you eliminate a class of bugs, right? Another thing is to make testing like really first-class primitive in your tooling. So, in the EVM ecosystem, it took a while for tools to emerge. Eventually, we have some really great stuff. I think Foundry is a really great toolbox that we, took a lot of inspiration from. And so when we built Soroban, the idea was to really, bring in, unit testing, integration testing, fuzz testing, fork testing, all these things into like the base tool set. And then we also want to bring in, the builders of like formal verification tooling and like the more advanced stuff and make sure that they're like aware and familiar with the ecosystem. But all of that at the end of the day, tech is great, but at the end of the day, you really want experts, like matter experts in the space. And so one thing that we did is to form a grant program that we call the Audit Bank. And so the Audit Bank is basically a way to connect new projects with auditors in the space, because a lot of, indie developers and new developers in the space, they don't really have access to high quality audits. And we want to make sure that whoever is launching their protocol has been audited. So, we have that in effect. And I think every protocol we had launched this year had at least one reputable auditor on it.
I would like to share our story here. We got hacked recently on the community front end. We faced supply chain attack. So we are living in very dangerous time right now. The hackers are very smart. So I have 20 years of professional software engineering architecture experience. I was working for bigger companies like Porsche AG. I was also taking care about security audits and so on. I have never seen something like this. So the hacker did social engineering on software engineers of a third-party library company who built an animation library for the app, for front end. So what we integrated. They did social engineering. They got access to the computer, did a commit, pushed malicious code, what attacked 1inch front end. This is insane. Yeah. So, and from our point of view, everyone who's building right now the app needs really to rethink what they are pushing right now and what they're building, how they build. Of course, we took from the beginning care about security audits. We always used HackerOne, for example, from Germany. Some other good companies who did backend audits, front-end audits, mobile wallet audits. We built mobile wallets completely natively, so we didn't use like React Native or something with a lot of dependencies. Every dependency what is now using in a wallet, in an iOS and Android wallet, is reviewed by the security engineers at 1inch. So and it kind of it helps, but something like this can happen always. So you need to really take care. In terms of protocols, if you speak about protocols, it's much dangerous because everyone can see the code. Everyone can read the code, and we have seen breach hacks, right? And also aggregators like this, I guess LiFi cross-chain aggregator was hacked, and the allowance was misused. I think also Uniswap faced only for small period of time also such a attack. Because someone deployed something without proper audit, and they allowed to replace code in a proxy smart contract, what we are not doing. So there are a lot of things what you need to follow and to take care. And also by building new things, you should take care that the amount of code is very small. Always, if you can remove something, then do it. There's Amorphous law. If something can go wrong, it will go wrong. And this is just really like that. And sometimes it's difficult, but we try our best. We do at least 10 audits. I think the most audited smart contract right now is Euler Finance. They did 30 audits for the last release. It was insane. It was like, they beat us actually in security audits.
We're the asset issuer, right? We're the canonical asset issuer of USDC. So we have this unique ability to actually mint and burn USDC. And so we think about cross-chain and turn this idea of bridges and intent-based bridges. We really started over. And we don't do that. CCTP, cross-chain transfer protocol, you send us the USDC on one chain. Once there's finality on that chain, we burn it there and we mint it on the destination chain. And that removes really any of these honeypots or bridges. It removes any the ability to be attacked, any of these vectors, and it's secure and going to be one-to-one from one chain to the next chain. Right now it takes about 15 to 20 minutes, but in January it's going to go to 45 seconds for issuing a major upgrade for CCTP. So that's how we think about it. We think that the multi-chain thesis is going to be here and probably is here to stay. How broad it is, whether it's 5 or 100 chains, is to be determined. But we think the ability to move USDC around and be the settlement token for multi-chain is probably something really important to us, and that's why we built this.
Exciting.
And I think for us as well, I think for Pith, we really also believe in a multi-chain thesis in the sense that there's not going to be, single chain that's going to be ruling all of DeFi or anything of the activity with regards to the crypto side of things. But there's going to be multiple winners of it, right? So you're going to be looking at maybe layer 2s, maybe it's going to be Solana, maybe it's going to be Ethereum layer 1 or whatever is going to be taking shape in the future. And so I think for us, the stance that we've taken is that as long as that particular chain shows tremendous growth activity and promise, we definitely want to be there. So what we've actually managed to do is that we've expanded to 80 different ecosystems, ranging from EVMs, non-EVMs. You talk about Sui, Aptos, of course Solana, and also pretty much Near and all of those other ecosystems that are just as growing as fast. We also want to make sure that we work with the foundations directly to make sure that we can address any kind of security issues or whatever costs that, whatever issues that may appear with regards to those particular native chains in the future. And also at the same time, we also work with a lot of these native applications that are on those ecosystems in order to make sure that Pith stands out among other infrastructure providers out there. So yeah, that's pretty much what kind of like our stance is. Want to make sure that we can provide the best experience possible, not only for the users, but also for the layer 1 and layer 2 foundations that rely on Bit as an infrastructure.
That's awesome. No, thank you guys for making DeFi secure. With that, we have like 12 minutes left, so why don't we jump straight into the hot takes?
All right. Do you want to go first? Okay. Crypto doesn't have a UI UX problem. That is not why there hasn't been more adoption or quote unquote mass adoption. It does have a UI UX problem, it needs to get better. But the reason it doesn't is a demand problem. If there was more demand, if there were more killer use cases for crypto, there would be more adoption. People would put up with the pain. Like, have you guys tried to buy tickets to a hot concert? Is a terrible experience, but people are willing to do it because there's incredible demand. The App Store broke all the time in 2008 when it first came out, but people will do it because there was killer demand. So I think all of us, something I think about all the time is how do we enable builders to make more killer use cases for crypto and along the way abstract away some of the complexity. I think it's a demand problem, not necessarily a UI UX problem, which is, I think, in the grand scheme of things, relatively easy to solve. Demand's much harder.
Yeah, that's a very interesting take, and I definitely agree because I think right now the entire crypto Web3 space is built like for gambling in one form or another. And I was listening to a podcast, and now that the regulatory environment is looking to be more favorable for crypto, now really it's going to come down to like there's no more excuses, right? It's like either there's product market fit and some super apps come out and go like viral, or like it's just going to be a casino for the foreseeable future.
Yeah, and just to add to that, like I completely agree with Sterling, and for the most part, he stole my hot take. But I think that like product market fit is something that Web3 has kind of like lost as a value, which is crazy because in Web2 for decades we've perfected the lean startup methodology and how to build products, and Web3 has completely abandoned that in favor of these like established lotteries and speculation, and we kind of like need to go back to the basics and how to build startups and really focus strongly.
It also gets obfuscated with token launches because you have no idea if you have product market fit or if people are just mining your token. So it's why I think like generally it's better to wait to launch a token and prove that somebody wants to use your product for free before you financially incentivize them.
Yeah, amen.
All right, I will continue. I recognized that more people start to take crypto seriously. Why? So if you look on the internet adoption back into the days, and compare it with crypto adoption, so crypto users, yeah. If you look on the chart, we are much faster in adoption of crypto than internet. We are right now in year 2000. So with crypto, so we are just at the beginning from a point of view. It's also interesting to see last days, everything goes up. Yeah? But did you recognize that the volumes are the same, almost the same, when it's like was before the pump, and now it's like continuously going up? I think it's institutionals who are buying right now, not users. So because of the volumes, they constantly just buy. They do pressure right now, and let's see where we will be in 20 years. Yeah.
I mean, on that point, I definitely agree on that take of like I think institutions are the ones that are buying right now. I don't think like mass retail is here yet, even though the Coinbase App Store is at like what I think 40 right now, but it fluctuates on a daily basis, like between like 40 and like 150 in terms of like most popular app. But I do think I mean on your earlier point about like the internet, like crypto being faster, like adopting faster than internet. I think the environment is different because when the internet was like being adopted, like when people were getting onto internet, everyone wasn't as tech savvy. While like the current world, like we're in a very digitalized, like, like tech oriented environment. So like the expectation is that it should be adopting faster and maybe even on a multitude like higher factor.
I have one thing. So regarding the hot take. So as much as, this is a multi-chain day event, and of course we all love multi-chain environments and everything else, but I honestly feel that as an industry, we need to grow up from building more infrastructures and actually targeting to more apps and actually targeting real users. We have too many L2s. We have application chains that pretty much have close to zero in terms of real user activity. And I feel like something needs to change on that front, like because, like that's just kind of like my take on it. I mean, even though we are powering more than like I said, 80 different ecosystems and everything else, but I feel like having been working with a lot of these ecosystems, I think a lot of the struggles that we also find in kind of like trying to actually see which kind of like applications that actually have real potential to actually address some of these real issues that are happening outside of, let's say, maybe DeFi or maybe in crypto. Like we haven't seen that actual kind of like killer app there yet. So what I want to see, at least within maybe next few months or maybe next couple of years, hopefully it's gonna be something like maybe less focus on infrastructure because we already have so many of those, but also at the same time start building, kind of like real applications that actually people want to use, and not just maybe for DeFi and native users, but also actually retailers that are actually coming outside of crypto. So yeah.
So it sounds like everyone agrees that there's a product market fit issue in the space. There's a common theme throughout this. I will add one thing, which is that I think that many people don't understand that the crypto economy is held together by duct tape. And I think that you look at DeFi, you look at RWAs, there are all these like big TVL numbers out there. But if you really dive into the numbers, there's a small number of interested parties that are dominating the space. We're talking about early whales, we're talking about VCs, we're talking about hedge funds. If these people like pull out of these like, unmaintainable positions in Uniswap or whatnot, like things start crumbling down. So we really need to move as an ecosystem away from speculation, away from leveraging as a source of yield, and to more sustainable other forms of financial instruments that actually can survive the next crypto apocalypse.
I would maybe not agree on that if someone pulls out the liquidity like VCs, that everything will break. It's not true. So as soon there's incentive for arbitrage, the demand will be fulfilled. So if someone come to 1inch and create an aura, an intent-based aura, or on Uniswap X, and this order is shared with market makers, arbitrage traders, they will arbitrage it because they make money on it. And they will arbitrage it as soon as possible because who comes first, they take it first. So it changed already. So if you think about DeFi 2019-20, when we started with aggregation, could be, but there were already a lot of users who provided liquidity. Yeah. So we, from 1inch, for example, we manage our treasury in our own private liquidity pool. So if VC goes out with 100 mil out, we are still with 100 mil inside, and can still maintain the volume theoretically, and earn on that as well. But I already said, it's changed. The technology changed with the intent-based approach. Since December 2022, we have seen 39 billion US dollars of volume on just only on 1inch. Uniswap X came additionally, and CowSwap as well is right now handling huge amount of volume. And in general, the volume comes from all sources like MetaMask as well, And as soon there's an incentive for like arbitrage, it will be fulfilled.
What would TVL numbers of DeFi and RWAs look like if the 10 biggest players in the ecosystem that are completely, crypto-focused, hedge funds, VCs, foundations, what happens if they disappear? What happens to the TVL?
TVL is right now around 90 billion of US dollars. Is one of my keynote pitches.
I'm actually interested.
Yeah, 90 bill. I don't have direct split on an analytics who is who. There are some whales for sure, but there are also smaller wallets, a lot of them. Also, if like 80 a bill will move out, yeah, still user would create orders on the spot prices. And of course, they will maybe face higher price impact up to maybe 5 to 10%, but still someone will feel it. I'm pretty sure not more than 5. So it's like for normal pairs like Ethereum and USDC, market makers like Wintermute will deal with this and will arbitrage it with centralized sources. It's what's happening nowadays. You create limit order in DeFi, it's going to be filled with someone who borrow on Aave, settle on chain for the user, and withdraw from centralized exchange and pay the loan back to Aave. This is what's happening right now. Like it's not anymore a few kids playing around and gamble in casino. It's highly seriously.
I guess jumping back to Mario's quick hot take over there, and as we wrap up this segment, I definitely agree on the consumer app. Like I think, we need apps and consumer apps products to go scale or go viral to make the space I guess super legit. And the reason why everyone's going for infra is because it's a proven method of like success, and it's too much of a risk for these companies like a founder to be like, hey, let me create a consumer app that may or may not work, right? So I think the incentives have to be there in place. But as we wrap this up, I'd curious to hear if everyone wants to like pitch, like just not pitch this, drop like what you think like the next consumer app could be.
24/7 trading of any assets in fully non-custodial manner. So stock, tokenized real-world assets, any currencies, 24/7 in fully decentralized manner.
That could be cool.
Remittance flows, paying people 24/7, 365, cheapest possible swaps into any currency around the world.
Can you repeat the question?
Yeah, just like everyone's pick for like what they predict like the viral consumer app could be.
Sure. Yeah, I think that there will be like TradFi will become more DeFi and DeFi will become more TradFi, and to the point where we won't be able to actually tell the difference. Like I think that we're already seeing, institutions like getting more and more involved in crypto, and we're already seeing these like bottoms up like crypto native issuers that are doing, things like stable bonds and things that look a lot more like traditional finance, but you can use them in, decentralized instruments, and you can like self-custody them in a much more open way.
I think it's gonna be. This is by the way, like just personal take, like nothing like really sponsored or anything, but I feel like something like potentially Jupiter, that is on Solana. I think that could potentially be like the next killer app out there because I mean, first of all, it's already been integrated with the biggest app on Solana, Pump Fund, everything else, Moonshot, and everything else. So I think that in terms of the ecosystem that it tries to create, when people can actually swap, people can do launchpads, people can do whatever they want, basically in one particular app, I think that's going to be really powerful. And that kind of like stickiness when it comes to retaining users, that's going to be like the biggest key in order for them to, keep using the app. And yeah, I think we've seen that time and time again with a lot of the other kind of like super apps in the Web2 counterparts in multiple different parts of the world. So I think the similar thesis is going to play out a similar way, in my opinion.
Awesome. No, it's cool. Social, DeFi, and payments. That's it. Awesome, folks. Well, thank you guys again for contributing to the panel, and that's a wrap over here.
Thank you very much.
Thanks, guys.